wondering where to stash your hard-earned cash to get your fair share of the savings pie? With savings rates on the rise, we could all use a little guidance for where to park our funds for maximum gains. Schools First Federal Credit Union is here to tell us why share certificates are the smart choice for reaching those financial goals. Let's welcome Fruit Ridge Branch Manager for Schools First. We have Tamara Thomas. Welcome back, Tamara.
Hello, Desiree. It's great to see you.
I know you as well, too.
Thank you.
Okay, so I always have to say, when you come on, when Schools First is here, I always learn such a lot of helpful information.
I love that.
Starting with, what exactly is a share certificate?
Yes, so a share certificate essentially is, a lot of banks call them certificates of deposit or CDs. So a share certificate, it's the same as a certificate of deposit. It's just what we call them at the credit union. It's a federally insured savings account that's designed so that you can earn a higher interest rate.
Okay, so how is a share certificate different from, let's say, a regular savings account?
Yes, when you think about your regular savings account, this is an account that's very accessible to you. You can put money in it whenever you want. Unfortunately, you can also withdraw money from it whenever you want. And so you have a lot of flexibility with the regular savings account. A share certificate is different because you are agreeing to keep your money in this account for a specific term that you choose. So they typically earn a higher rate because there isn't that same flexibility that you have in your regular savings account.
Well, that sounds like a benefit because, like you mentioned, if you have to keep it there for a certain amount of time, you're not maybe double dipping too much, like I sometimes do.
Right, yes.
So what term is required to receive a higher interest rate in a share certificate?
Sure. So they have the terms vary. So depending on the institution, they may have different terms. But typically, you see anything from 3-month terms to 5-year terms, and sometimes even longer. So it's really going to depend on where you invest your money, but the longer the term, typically the higher rate that you'll earn, although there are a lot of places right now that are doing special promotional type for the shorter terms where you can earn a higher interest rate.
Okay, and then with inflation, with rates increasing, how do you know the term to choose that's best for you?
Yeah, that's going to be the puzzle, right, that you're going to have to try to figure out. So always get financial advice, but it's really going to depend on what your plans are for your money. So say I sold my house and I'm not purchasing for another 3 months. I have the time to invest that money for 3 months, but if I was to invest it for longer, I wouldn't have access to it without potential penalty. So it's really going to be about what's kind of going on in your financial life and what you need these funds for, what you have, what you can spend, and what you can't. And there are different strategies that you can utilize to optimize, like kind of getting that best interest rate. Certificate laddering is one where you take your sum of money and kind of invest it into different term certificates so that you have different money coming available to you.
All right, you use that term laddering. Explain the money ladder concept. Is it like having your cake and eating it too, money in the bank, and still get a slice when you need it?
That's a perfect analogy. I love that. So yes, certificate laddering is taking your funds and divvying it up between different terms so that you have money that's maturing kind of as frequently as you said it. So a really great example is you have $5,000 to invest. Rather than putting that $5,000 into a 5-year certificate, you could do 5 different certificates at $1,000 a piece. You can see on the screen, you open a 1-year certificate at a 4.10%, a 2-year at 4.35%, a 3-year at 4.5%, a 4-year at 4.65%, and then a 5-year at 4.75%. As you can see, the longer term earns the higher interest, but this is set up so that each year you will have funds becoming available to you. So you can make that decision if you need those funds now or if you want to continue to invest and continue that ladder going on. So it gives you that availability. You're still earning money, you're still earning interest on your money, but it is becoming available each year so you can make a decision on what to do at that point.
Okay, all helpful tips. And now I know more about share certificates. Thank you, Tamara.
Of course, it's my pleasure.
All right, you can visit one of the many Schools First Federal Credit Union branch locations as seen on the screen. They have more than 70, and you can find out more online by going to schoolsfirstfcu.org.